Hello and welcome. Yesterday, in the first half of the day, the European currency tried to gain value. However, its unsuccessful attempts to rise above 1.1222 created a sell signal. As a result, the euro resumed its downward movement and hit February lows. Yesterday's data on manufacturing activity in the euro area turned out to be worse than expected. This report, along with geopolitical tensions, increased downward pressure on the currency. German annual inflation turned out to be above analyst forecast. The National Consumer Price Index rose by 5.1% year-on-year after an inflation rate of 4.9% in January. Compared to the previous month, inflation was up 0.9% in February. Despite this, the euro extended losses. Besides, upbeat statistics on US manufacturing activity released by the Institute for Supply Management only boosted demand for the US dollar. Notably, the main reason for a decline in risky assets is the Russia-Ukraine military conflict, which is expected to intensify. Against this background, market participants are fleeing to safe haven assets, including the greenback and bonds. As for the British pound, the situation is similar. The currency failed to the low posted on February 24, but this target is still ahead. Today's macroeconomic calendar includes data on German unemployment. Besides, traders may take notice of statistics on Eurozone inflation. The Consumer Price Index is expected to rise to 5.4% on an annual basis, which is a higher rate. This will probably force the European Central Bank to take a more aggressive approach to its monetary policy. In theory, this move is supposed to have a positive impact on the exchange rate of its national currency. Furthermore, ECB members are set to speak today. However, the focus of market players will be on the news to be realized during the US session. The United States will report ADP's payrolls data. Non-farm payrolls are anticipated to rise by 378,000. In addition, Fed President Jerome Powell will deliver a speech. Traders are hoping to receive any clues about the regulator's further steps, its reaction to high energy prices, which are pushing up inflation. On the one hand, amid escalating geopolitical tensions, the war in Ukraine, as well as sanctions on Russia, the economy is in danger of sinking into recessions and facing slower growth. Therefore, it makes no sense to withdraw stimulus measures. On the other hand, inflation is surging, and if the Fed does not raise interest rates, the situation will only get worse. From a technical point of view, the levels of 1.1092 and 1.1141 act as support and resistance respectively. A false breakout at 1.1149 will create a strong sell signal if the price fixes below 1.1092 and tested from the bottom up. The euro will most likely slide to 1.1062 and then 1.1029. The pair's downward movement is likely to be limited by the level of 1.0994. At this mark, it will be possible to go long on the rebound, counting on the intraday correction of 20-25 pips. Long positions at 1.1029 and 1.1062 and 1.1092 can be considered only in the event of a false breakout. Notably, the MACD indicator is forming a divergence. Thus, if the price falls below yesterday's low and returns to the 1.1092 mark, the volume of long position will increase. Bulls will strive to regain control of their 1.1141 level. If the price consolidates about this level and tests it from the top down, an additional buy signal will be created. In this case, the euro will have a chance of recovering to 1.1184 and 1.1229. At the level of 1.1229, traders will be able to go short on the rebound. Short positions at 1.1184 can be considered amid a false breakout with a view to returning to 1.1141 and forming a new sideways channel. Speaking of the British pound, a breakout of 1.3303 will lead to a new massive sell-off. The pound sterling will most likely plunge to 1.3270 and the way to 1.3232 and 1.3200 will open at the level of 1.3200. It will be possible to go with the pair, to buy the pair on a rebound, hoping for an intraday correction of 30 pips. Long positions at 1.3270 can be considered only in event of a false breakout. Besides, traders may go long at 1.3232. However, they will hardly be able to earn more than 20-25 pips. A false breakout at 1.3303 will create a buy signal. In this case, the principal task of bulls will be to regain control of 1.3336. If the price tests this mark from the top down, the volume of long position will increase further and the pound sterling will be able to return to 1.3369 and 1.3405 at the level of 1.3405. I recommend going short on rebound. Short positions at 1.3369 can be opened only following a false breakout with a view to a correction to 1.3336 and 1.3303. Market sentiment is currently bearish. Please be careful with purchases. Any further exacerbation of this situation in Ukraine will contribute to a steep fall in risky assets. Therefore, it will be a wise decision to focus on short positions amid corrections towards strong resistance levels. Good luck.